likely aware that life insurance can help you with your financial protection. But did you know that in addition to death benefit protection during your working years, permanent life insurance has the potential to build cash value that can be used to help supplement your retirement income, generally tax-free? Let's take a look at an example. Let's say you are 45, married, and have 2 children. Let's separate your money into 3 buckets. In the first bucket, or after-tax bucket, you have $75,000 worth of stocks. You also own $50,000 in mutual funds, along with an annuity worth $20,000. Most after-tax investment distributions are taxed at the capital gains rate. Let's call the second bucket the before-tax bucket. Many clients have a 401k account, which for most people will be their biggest retirement asset. Many will also have traditional IRAs from previous employers that have been rolled over. In our example, you have $150,000 in your 401k account and $40,000 in a traditional IRA. These are tax-qualified types of investments, and their distributions are taxed as ordinary income. Now, let's take a look at the third bucket. It's an after-tax bucket like the first one, but the distributions from this bucket are potentially tax-free. In most cases, you'll find that this bucket contains only a small percentage of assets compared to the other buckets. In your case, it has none. This is where life insurance can come into play. The cash value potential in the policy you decide to purchase becomes part of the third bucket. During retirement, you may access that cash value through policy loans, which are generally tax-free. So in addition to death benefit protection, you gain an additional bucket to consider as part of your retirement planning. To learn more about how cash value life insurance can help supplement your retirement planning options, contact your financial professional today.